Um, Hi, this is Ramesh Gopinath. There's been a lot of talk of late of and that the demonetization and the GST has killed our economy. It has kind of reduced our GDP over the last 6 quarters. And November 8th, 2017, the opposition parties and they want to call this as a black day in the Indian economy, right? But I have a little different opinion about this, so I thought I'll share this across my 2 cents. Okay, so see, number one, let's try and understand why, first of all, actually, from 2014 onwards up to 2015 or 2000, mid 15 or something. Or rather, okay, let's put it this way: from 2000, from 7.2% GDP in March 2015 to about 9.3% GDP till the March 2016, right? So the GDP went up. The GDP started looking north. So we should first try and understand that why did it go up, and then from the March 2016 onwards, it has been coming down. It's been looking south. It's been kind of decelerating, slowing down for the past 6 consecutive quarters, coming down from 9 point as high as 9.3% down to 5.7%. Right. So let's understand both. Let's understand first why did the GDP go up? Why did the economy do well? And then why did it start decelerating? Right. So we should understand both the things. Now, there are actually three or four fundamental contributors for the economy to look up. Number one is the investment to the GDP ratio, if there is a good amount of investment. Number two is in terms of the agricultural produce, an increase in the agricultural produce. Number three is in terms of the industrial production. Number four is in terms of better exports, right? So these four things usually contribute to the better GDP. Now, if we look at first, why did the GDP go down? Hmm? Right from 2011-12 onwards, actually, the investment to the GDP ratio has been, it is slowing down. If you really do a deep dive and look into it, it has been slowing down. Number two, actually, in 2014 and 2015, consecutive years, actually, we had drought. So, which means that the agricultural produce was not good. Okay, and so these two, let us and then exports also were not very this thing, right? So let us just keep so if you just take these three factors into play, then if you say that, if you look at why did the GDP look up, then the answer to that is oil. Okay, so the oil prices started going down big time, right from $120 a barrel to as low as about $38 a barrel, right? So the oil prices going south actually contributed big time for the economy to look up in Indian context, because Brent. I'm talking about Brent crude. So if the Brent crude actually as it started going down, consumers, I mean customers wanted to leverage that, and then so obviously the suppliers also wanted to pitch in, wanted to cash in on that. So because of these two things, actually the industrial production started picking up, the manufacturing goods started picking up, and there was a huge amount of demand actually which came in, and the supplies actually kind of tried matching with the demands, and that is the reason why the economy actually started looking excellent. It started going excellently from 7.3 onwards to 9%, 9.3%. Okay, in spite of the fact that there were 2 years of consecutive drought and the investment to the GDP ratio had fallen down. Now, then, actually, why did it start slowing down from 2016 onwards? Is it because of demonetization? Is it because of GST? Well, GST and demonetization, yes, actually, like when people bring in, I mean, these two are some of the massive economic reforms actually which has hit Indian this thing. So definitely there is going to be a little bit of shakeup, and there will be a little bit of a kind of little bit of a destabilization will happen. That was accounted for, that was discounted for, and the markets knew, the analysts knew, everyone knew about it. Okay, so but what was the other contributor to this was the cooling off effect. Okay, whenever there is a rally which which goes up like this, it will culminate in a cooling off. The culmination happens because of the supply demand curve. So when the demand starts increasing exponentially, and when there isn't enough supply to match the demand, typically what happens is there is there is an equilibrium price actually which the suppliers start pushing up, and because of that the demand automatically starts slowing down, and then they are able to match it with the supply, with the existing supply. So this is the temporary arrangements actually which has been happening in the industry for quite some time. So this is a very quick little thing that people do to ensure that the kind of demand doesn't keep going up, and then the rally doesn't keep going up like crazy. So that is exactly what happened, and then actually, so there was a deceleration, there was a cool down. The cooling down effect is what actually happened, which is why actually and then of course, if you look at it, the oil prices also started going up from $38 a barrel to about $60 a barrel. So when so this is exactly what actually happened. So in effect, actually, demonetization or the GST on its own did not contribute heavily for the deceleration of our growth. Okay, but of course, yes, actually these two, as I said, definitely there was an impact for because of the demonetization and GST, and this is only a initial kind of it's we call it as teething problem, right? So once the teething problem is overcome, then in the long term there is going to be a good growth. Okay, so now we should also try and understand. I mean, there is of course the kind of twin balance sheet problem, the kind of TBS actually, which is actually the reason why we are having major issues. And the twin balance sheet problems is because of the NPA, right? NPA and the corporate balance sheets. So before I get on to that, I would like to talk a little bit about the demonetization and as well as the GST. That like why was it essential, and whether whether it was required at all or not, kind of a thing, right? So demonetization, if you look at it, apart from the fact that there are a few other benefits that which came out of that, some of the critical things actually which are very essentially when we do a deep dive we have to look into it is the cash percentage to the GDP ratio. Now this is very very important for any sovereign country economy to look up to, for their sovereign ranking, and for them to be well accepted in the markets, right? Now, all the developed countries, okay, they all have a cash to GDP ratio of about 4 to 5%. The developing nations are the ones actually where the cash to GDP ratio is a little bit on the higher side. And in Indian context, actually, it had gone up to about 13% of the GDP. Now, what is a GDP? A GDP is about $2.3 trillion. So convert that into rupees, it becomes about 153 lakh crores. Now, 13% of that actually is about 17.5 lakh crores is our cash component of the GDP. Now this is extraordinarily high. I mean, it had to be brought down. Why did it go up? Let's understand that a little. Cash is printed by the RBI, and then it is circulated to all the banks, all the lenders, and then the lenders actually start lending it to industries, companies, and then it goes on, right? Now the cash which goes out, okay, has to come back into the banking system again, so that it can continue to go back and forth, right? So if the cash doesn't come back into the banking system, and if there is a lot of demand for cash, then RBI or the government actually has no other choice but to print more currencies. And why does this happen? Why does cash not come into the bank? It is because the cash gets hoarded. Okay, So the cash gets hoarded in the outside of the bank with people, and it doesn't come back into the system, into the banking system. Now, people also argue that, what is wrong? I mean, cash can stay outside the banking system because obviously, I mean, I pick up cash from the bank and then I buy something and then I give my cash to somebody and that somebody gives it to somebody else and then it goes on, right? There is no real necessity for it to come back into the banking system. But what actually happens is that if the circulation is happening, that's good. If the circulation is not happening and if it is hoarded, then that is a problem. Now, that is exactly what happened over here. Now, the another interesting statistic to note is that the banks actually kind of turn over about 9 times the money that what it has, right? So that is the power the banking industry brings into the economy. Okay, now that was exactly the problem. So the money was not, cash was not coming back into the banking system, it was getting hoarded. And also the other important thing is that to continuing that is that typically if you look at any of the developed countries, right, their high denomination notes will not be very very high. The percentage of that will not be very high. But in Indian context, actually, the high denomination currencies became 86% of our total cash, which was extraordinarily high. And when this happens, actually, and then it gets hoarded, and 65% of the high denomination currencies was not coming back into the banking system. Now, when this goes high, and when the banking system doesn't get back this money, then that results in a huge problem. Okay, this is exactly actually what happened. So, and also the other fact that actually, if you look at it, the first of all, the high denomination currencies was 86%. There was about 65% of them was not coming back into the system. 13% of the GDP was the cash component. Number 4, the most important indicator is that people, when they want to park their ill-gotten wealth, this thing, I mean, they park it mostly in the gold and in real estate. Now, the real estate actually inflation went up nearly 20 times, 25 times, 30 times in the last 1 decade, which also actually proved that there is something totally wrong in the economy. So to correct this, demonetization had to happen, so that all the money gets pulled back into the banking system, it gets flushed with funds, and then the government decides what it wants to do with that, right? So that is one of the important things. Now the GST, okay, why GST was required? Well, I mean, actually, other than actually simplifying the tax, and also kind of the most important contributor, I mean, this thing is that if you look at one particular statistic, right, the world average for the trucks, okay, how many miles does it do on the road per day? The world average is about 500 miles per day. Indian average is about 230 miles per day. Now, why is it almost half of the world average? Is it because the Indian roads are not good? Is it because the trucks are not good? No, maybe. But then the most important factor is that there are too many stopovers. There are too many octroi checkpoints. There are too many entry tax checkpoints. When it cuts across all the states, then that is the reason why it was slowing down. Now we all know that the ships are built to be in the sea, the aircrafts are built to be in the air, and then trucks are built to be on the road. If it is not on any of these things, then there is no good ROI which comes in. So that was again one of the important things to also ensure that there were a lot of traders and a lot of people actually who are not. Now, why are people talking about the GST is very bad, it is not helping and all those things? Most of them are MSME traders. Okay, so why are they talking about that? That's because actually to begin with, actually they were not billing the transactions. People were also very happy because actually if someone were to be asked that do you want 100 rupee item will be 100 rupees if you pay cash, or it will be 120 rupees if I bill it, okay, with the tax. So everyone would say that, okay, that's fine. I mean, I will take it. I'll just pay cash and then I'll pick up the item, right? That's what was happening. And a lot of traders, MSME traders and other people, they were also very happy doing that way. Now with the demonetization kicking in and then the GST also coming in, they have no other choice but to bill everything, and then the GST has come in. So that is what is becoming the problem for them. Now it is just a question of that, they have to get used to it. In a shorter run, they will have some little problems, but in the longer run, I think they will get benefited. Everyone will get benefited out of it. Okay. So that is exactly what is happening right now, the problem that is happening right now. Now, if you look at Indian context, actually, we are about a $2.3 trillion economy, which is about 153 lakh crores. But there is a huge amount of shadow economy also, which is, which is there, right? The cash economy. So, that if you actually, even if you convert about 30% of the shadow economy into the, if you bring it into the real economy, now that brings about, 100 and maybe the 153 lakh crores actually will become 200 lakh crores, right? So it will become almost about $3 trillion economy will be ours, 3.2 trillion dollar economy. Now that is actually a good, it's going to be a very good this thing for the Indian economy, because people will start then looking little in a different way towards the Indian economy and towards the Indian then in terms of sovereign rating and all those things will go up. So that is actually the case, and so the actual problem, I mean, so the GST and the demonetization, both of them actually they have not killed the economy, they have not killed the GDP. It is the cooling off effect, the oil prices actually, which caused the this thing initial surge, and then after that the slowdown. Now, apart from that, as I talked about, I mean, there is a TBS, the twin balance sheet problem that which we have, the NPA problem. So that is exactly what is the little bit of a problem. So now, once we solve the NPA, I'll also be recording one more video to talk particularly about the NPA, about how to get around that, etc. So once the NPA problem gets resolved, I think, and also this initial, and this GST also in another this thing, if you look at it, the government knew. I mean, the government knew that this is the GST rollout when they do. There was a GST council which was set up, and then the GST council was going to regularly get feedback from everyone in order to understand, how the how the GST is functioning, and are there any problems, etc., and all those things. And then if there are issues, if there are problems, the teething problems, they were going to come up with some kind of a issue resolution for all those things. So this has been the plan. So it's not something like the opposition starts jumping up and down and says like these people did not know how to this thing, and so now they are actually looking at revising the slabs, revising, bringing down the slabs maybe, or cutting down the percentage of the slabs in the GST and etc. and all those things. So they should have planned all these things upfront and all those things. So it's not like they would have they should have planned initially and they should this thing. It's just a question of that actually you roll out something. I mean, a big financial reform like this will always need to be closely monitored to see how it is functioning, what are the issues, what are the problems, and then if there are issues, then address those things. So I am sure actually once the government starts addressing, actually they're looking at the GST this thing, they are trying to kind of like ensure that the slabs are little kind of like made, they can make little better slabs or reduce some percentages, or kind of shift around some of the commodities which are in different percentages, so that they will do. And the second thing is the tackling of the NPA problem. And the third one is also, as the traders and people get used to GST, I think once they get over this teething problem, I think it's going to be a happy hunting ground for everyone. And I think it's definitely going to look up. And our macroeconomic fundamentals in any case are very good, the country's macroeconomic fundamentals. So I'm sure actually with FDIs, if you really just look at the FDIs, they were about they were about $36 billion in financial year 2014. Now that has gone up to $60 billion in 2017. Now it's about 80% the FDIs have gone up. Now that is a very good sign of they see India as the place where there is a better return on investment, ROI. That's number one. Number two is the forex reserves. I mean, we have about $400 billion as the forex reserves, which is excellent. It can serve up to about up to 11 months, 12 months of import bills. Number three, our fiscal deficit also is being controlled at about 3.2%. It was as high as about 5%. It has been brought down to about 3.2%. It is further going to go down under 3% in 2019, 2020. The current account deficit, the difference between the exports and imports, actually it is pegged at about 2.4%. So with all these things, and with a very good demographic dividend that which India has, okay, so and with the Make in India, Skill India programs and everything, I'm sure actually this is going to get over as early as we talk about, and already actually when you look at it, like there has been the mandates which has been given to the government in multiple election after election where they went to the states, right? So the current government in the central government, right? I mean NDA, apart from Bihar and apart from Delhi, okay, they haven't lost anything at all. Apart from Punjab, there are three states actually which they lost, and apart from these, I mean everything they have won. Even in terms of the municipal elections, also they have been winning everything. So this itself is a kind of a referendum that the citizens are giving back to the government, saying that, I mean, you guys are doing a good job and you know how to manage the situation, manage the economy and stuff like that. So I think we are in safe hands. So let's just watch as we go into the next quarter. All right. So that's it. Regarding the GST demon affecting the economy, my 2 cents. Um, Thank you very much.